From the taxation front, with due respect to the government, I think it's a little sad, it's a little disappointing what has happened.
Really, I think the stablecoins today give a glimpse to what a CBDC could look like. Right?
You can't say CBDC is good and cryptos are bad. That argument doesn't stand technically.
If you can back currencies by natural assets, then you can basically tie the adoption of currencies to the preservation of our environment.
Web3, blockchain, crypto, what can these three things do for a country's national security perspective? This is an inflection point. If you're a country today and you don't have many resources, you will look at crypto and Web3 to build alternate infrastructure for you so that you safeguard yourself.
We live in strange times where the concept of money is changing or transforming to attain newer meanings. And today the buzz is all about cryptocurrency, right? But one of the larger reservations against them is that they're way too volatile and they're not pegged to anything real. And while this has been a constant refrain, there are more evolved modes of thinking emerging, and we have stable coins which promise greater stability, and CBDCs, which are central bank digital currencies, which is a digital manifestation of fiat monies. Now, this does offer people a lot more reason to explore the market, and today we're going to understand these so that you can make a better informed decision. So joining us today are Rene Reinsberg, the founder of the Celo Foundation. Hi, Rene. Thanks for joining us in.
Hey, it's great to be here.
And please welcome back Aritra, Sarkhel, the Director for Public Policy and Government Affairs at WazirX. Hey, Aritra.
Hi, man. What's up? Hi, Rene. How are you?
Awesome. Let's get started talking. Rene, I want you to comment on this. Stable coins. What really sets them apart from, altcoins or other cryptocurrencies?
Absolutely. Yeah, I mean, look, anyone who's been following crypto even from afar probably has heard of the famous pizza story where someone bought pizza with Bitcoin. And, if you kind of look at this in today's value, I haven't done the math because even in the last day, Bitcoin price has changed quite a bit, but, it would have been millions of dollars. And, it's really interesting because I think by now it's become quite well understood that, a deflationary asset like Bitcoin is really more kind of an equivalent, to like a digital gold almost. So it's kind of a digital gold versus, a form for payment. And so stablecoins really are kind of a class of digital assets that track the value of a fiat currency or potentially other benchmarks, and therefore are more useful in the context of payments.
I thought you find a lot more people wanting to get into stable coins when it comes to WazirX. How are you reading this?
I mean, after today's taxation announcement, I don't know about that. I'm trying to be as happy and positive right now. Rene has just woken up in San Francisco. Hi. So
I saw
you'll catch up with the news. You'll catch up with the news.
I was going to ask you. I saw the headline just before hopping on this call. So yeah, I'm curious to chat about that.
Yeah. I mean. Before I go into stable coins, I know you both have an audience, you both have friends and family who are hearing to this. I think it's quite sad what has happened today with the passing of the bill, the taxation bill. I mean, a lot of work went in the last 1.5 years, and it's really sad what has happened because it's just not about exchanges. I mean, I come from the largest exchange in India. There are other exchanges who want to come into India. There's a larger Web3 community. There's a larger blockchain product community. So if you look at from all the angles, from the taxation front, with due respect to the government, and even when we're talking about stable coins and all of that, I think it's a little sad, it's a little disappointing what has happened, because this is a pushback, not only to investors or from like retail investors, but also to people like you and me who invest in companies or you want to build companies. But as they say, hopium drug, hope. So let's see something good happens on the build front. But having said that, stablecoins, I find stablecoins fascinating, but also at the same time, I also find them a little challenging. So I'll give you a little history. And okay, full disclosure, I do invest. I have invested in a lot of stablecoins. And so I want to make that full disclosure. But see, here's the thing. I think it's really fascinating for a few reasons. Like whether it's a US dollar or say on one side you have the dollar, right? And the other side, say an extreme example, like the Dogecoin, right? What is a currency? A currency is basically a medium of exchange, right? And a mode of storing wealth, right? And in the real world, stability is the essential quality of a currency, right? But not so in the world of crypto and virtual digital assets, right? The world's most popular crypto Bitcoin once shot from $5,000 to let me get my numbers right, $19,000 between mid-November and mid-December in 2017, right? Then it fell from about $6,900 by early February, and more recently it moved from around $12,000 in August 2020. I remember last year to $44,000 in August 2021. So what does it say? I mean, even on an intraday basis, it's not uncommon to see cryptos jump or fall by 10%, right? So that this is massive swings in magnitude, right? Which are not the traditional characteristics of a stable currency, right, guys? So they have more in common with speculative trading instruments like derivatives, if I can put it like that, which are attractive to the speculators, but impractical, I would say, for the mainstream use, right? So that is where I think stablecoins come into place. It's a new class of I think I should stop calling it currency. Either I'll get in trouble, a lot of other people put me in trouble. Virtual digital assets it is, right? So now, then comes stablecoins, and at the very, very fundamental level, its aim is to provide what? Price stability and steady valuation, right? People inside crypto understand this, people outside crypto also understand this, right? Now, it is again used as a medium of exchange or a store of value. A model crypto coin should retain its purchasing power and say experience minimal inflation, just enough to encourage spending the coins instead of storing them, right? So stable coins attempts to achieve this ideal behavior. And then since say crypto operates on a global level today and is not controlled by one central authority globally or in your country, in our countries, it is theoretically offers the best of both the worlds. It has what? Security, anonymity, not for the larger law enforcement, and decentralized features of the same crypto and the low volatility of a fiat currency. That's the way I put stablecoins as.
I think one of the bigger challenges out there, Aritra and Rene, is that I think we suffer from a massive challenge with people not understanding these things because it's so heavily skewed towards technology. And people want something that is very, very, very simple. So here at Business Insider India, one of the things that we constantly try to do is to educate people and simplify things. I know simplification removes the nuances of, the features that stay out there, but we still think helping people understand the basics is what is the first step for them to be more interested and dive deeper in. Rene, we have stablecoins, we have CBDCs. Let's talk about stability. For somebody who is getting initiated into this world, how would you help them understand, how to choose between them? How would you go about it?
Absolutely. And, I think what we've seen so far, I think you could generally put into three categories in terms of what use is there for digital assets, crypto assets. One is really, as a store of value, and this is kind of where I think Bitcoin, falls into this category, right? People hold on to this. They know there's kind of a fixed supply, right? And it's an asset that they can hold for a long time, maybe even use as a collateral in a lending market. But that's I think fairly well understood, and I think there are many other assets that fall into that category. I think there's a second big category, which was the rise of these kind of new protocols that basically kind of enable all kinds of use cases in what we now call Web3. There's kind of need for deciding on how to govern these protocols, right? What kind of decisions are made about how these, the features of these protocols. And this is kind of generally falls under the category of utility value, right? So I have a token, and this token allows me to control certain features of the protocol and vote on, for example, changes in the protocol. And sometimes you have those first two use cases within the same coin, right? So in the context of Celo is a layer 1 blockchain, like Ethereum, but proof of stake and carbon negative. We can talk about all of that, but the Celo asset itself, the native asset, is deflationary, has a fixed supply, so it has that store of value functionality. But at the same time, people use it to vote for changes to the protocol. They use it to stake, to secure the network, right? And so that kind of brings utility to the token. And then you have sort of, I would say, a third category, which really, I think, stable coins and, fiat-pegged stable coins is sort of the tip of the iceberg. But in a way, it's about bringing anything that exists in the real world kind of on chain, right? And so one area that I'm excited about, which they're sort of also stable coins, there's quite a few companies now, projects that are bringing voluntary carbon credits on chain, right? And they track the value of the carbon credits that voluntary carbon credits that exist in terms of certificates already, right? And by bringing them on chain, we're able to create much more transparency, much more liquid markets. It's much easier even for an individual to offset their carbon footprint. And now these assets can also be used in the context of this kind of Web3 world as, for example, collateral or as a building block for other applications. And so today, I think for most people, stablecoins, when they think stablecoin, they think, oh, it's a digital dollar, right? But it's really just kind of the beginning of like a whole new class of assets that are just, in a way, kind of tracking the value of a real world asset that, in that case, is maybe much more in sync or has like much less volatility than a pure deflationary asset. Now, talking a little bit, you asked about CBDCs. CBDCs are interesting, and I think it's there's sometimes people say, oh, a CBDC is this, but there's a whole range of possible implementation for CBDCs. And to be honest, while most central banks in the world now have looked at CBDCs or have started, doing investigation and educating themselves, maybe even running experiments, we're far from actually seeing really CBDCs being rolled out to, kind of the general population in especially bigger countries. And I think that's going to take time because the technology itself is not, I think, where it needs to be for a CBDC to be useful in everyday life and work seamlessly, right, with all merchants, with consumers. And I think that's going to come, but I think there's also still some kind of important infrastructure that is lacking that needs to be built. And I think as we build that infrastructure, there's also more time to actually kind of get more clarity on what is actually the best implementation, right? Is it a digital asset that sits on an open permissionless infrastructure like Ethereum, like Celo? Is it a digital asset that sits on a permission infrastructure that is controlled by a few stakeholders? Is it maybe kind of a separate chain that just holds the asset and then bridges to kind of existing chains, right? There's all kinds of potential implementation possibilities. And personally, I see some of the smartest central banks out there just being very open and engaging and pushing sort of like, hey, how does this technology actually work? And what are the benefits? What are the risks, right? And we have set up a sandbox, for example, for central bankers to run experiments, and others have too. And some central banks even have set up their own sandboxes, right? So I think we're in this sort of time frame of just, I think experimentation, right, to really understand how something like this could be rolled out at a bigger scale. But in a nutshell, coming back to like CBDCs versus kind of the stable coins we're seeing today, really, I think the stable coins today give a glimpse to what a CBDC could look like, right? So in the case of Celo, Celo dollars, Celo euros, Celo real are pegged to, existing fiat currencies, the dollar, the euro, the real in Brazil, and are used for everyday payments, right? People in Brazil can go to a store and pay with Celo real, right? And they can hold Celo real in their wallet, earn a yield on it, right? And so I think these are actually good insights as we think about sort of how is this kind of digital currency universe going to develop, because it's happening, right? And so I think this in itself is informative for central banks as they figure out what to do.
And I want to talk a lot more about Celo, and I'm going to just come back to you in a moment. But Aritra, your take out here, CBDCs and stable coins. I know CBDCs are still a little way off in India if that does come to pass. But at this point of time, what are you thinking about them?
I mean, first, I think if people, the larger bureaucrats and the policy makers here in Asia, if they understand the CBDC, I think they should also understand what blockchain as a tech means for the larger industry, right? So it's like I find it pretty funny when we talk about, I mean, when I say we, like, see, people like you, me, and him, and we're still one part of the world, right? This is one funnel, but the other funnel is what the government and larger policy makers. It's the state, it's the center across the world, in America, here in India, everywhere, man. So why I find it funny, because the moment you talk about CBDCs, my understanding is, so if people can understand CBDCs and understand the value of CBDCs on blockchain, boss, then you should also understand what cryptos and what tokenization and what tokenomics means, right? You can't say this is good and that is bad. I mean, technically that doesn't make sense to me, honestly, when it comes to an argument. But point number two, I think CBDCs are pretty cool, but here's the thing. Again, as I said it before, there are various ways to look at CBDCs. One is it's fundamentally a private blockchain, right? So, I mean, you can't compare it with the way other public blockchain companies and token products run, right? That's one. Third, especially in a country like India, and the reason I'm going to take an Indian example here, because the arguments that I've heard in India is on CBDCs being digital rupee and something like that, right? I think all of us have heard this argument, but hey, even before there were talks on blockchain and CBDCs in India, through a public-private partnership in this country, we already saw two monumental things come up in the financial space in India, right? One was the UPI and second was the rupee. Now, if you look at how UPI is constructed in India, the entire tech architecture, that itself makes rupee digital. I don't know if that is not digital rupee, what it is, binary, for God's sake, right? So that's one part of the thing, right? Now the third is, and this is a question I've asked back to every minister and bureaucrat in India, is that if CBDCs come into place, say you have a digital rupee or a digital dollar, then what do private banks then do? Please explain me the role of private banks then, and what is the role of private banks in terms of pooling liquidity and all of that, right? So then one central bank can run the entire monetary aspect of a country, which is great. I don't understand much of that, but then this has to be discussed further. But other than that, there are some finer aspects to it, which I really find it fascinating, especially in the Asian, if you look at the Asian economies, the Asian countries, right? Like, I'll take two examples. Look at Bangladesh. This is really fascinating. I mean, I find it fascinating. I was in Bangladesh for a week last month, and it blew me apart how much they have progressed as a country on the tech front. Now, everybody, most of the population has access to a smartphone. One, they have access to digital payments and all of that. Internet is fast over there. Like, more or less, out of 10, 7 people have access to 3G and 4G internet services. What that means is financial inclusion becomes, on one aspect, you have this massive infrastructure build, like fast internet, cheaper mobile devices, and then you have things like UPI and CBDCs coming into play, right? So financial inclusion, if I can put it simply, like doing something financially for the person at the end of the funnel, which is, say, some village in India and all of that, with access to that becomes easy. The government can actually use CBDCs to like, how do I put it? The government gives out a lot of grants and all of that. The government also tries and helps each and every citizen of this country, right, through various mechanisms, like monetary mechanisms. Now, in olden days, I mean, you can give out cash. Like, I remember during COVID, my wife and sister are in the US, right? I still remember this. I think cash dollars were going in little pamphlets, and they were being couriered in North America during COVID. If I'm not wrong, I mean, you were getting during the COVID time monthly, right? That can happen in CBDC. That can happen in UPI and stuff like that. But having said that, I mean, while individual country contexts remain important, there are also areas of convergence, right? Like, all central banks have explored intermediated operations model. Countries are seeking a balance between preserving key aspects of traditional monetary and financial system, while at the same time updating the role of central banks in the digital era. So, relatedly, all CBDCs currently in circulation have a design characteristics that limit competition with bank deposits. But I still think and remittance plays a big role, right? Like, if you look at how remittance is currently structured in the world, and imagine if remittances can happen between CBDCs and stuff like that. Last, I think CBDC exploration, honestly, is at a still early stage in our country and other countries as well, and not all country experiences can be easily ported abroad. Very important point to note, right? There are still open questions, like, and CBDC remains an uncharted territory, raising challenges as well as opportunities. So what I believe needs to happen is increase international information sharing of insights learned from individual CBDC projects, and cooperation on policy and design will be very important going forward. Because, see, there are pilot designs among jurisdictions, which has happened time and again, right? The exact dividing line between an open-ended pilot and an officially launched CBDC is therefore not always a clear cut, especially when you have an officially launched CBDC can continue to be upgraded and developed. So I think it's fascinating what's happening. especially in the Asian context, I think it's really, really fascinating, because if you look at the number of, and 5G will be rolled out next year, if I'm not wrong, right, through some aggregators here in some countries in Asia, right? That really changes the game completely. So I think it's fascinating, but I still see, I think all of us have read the white papers of CBDC from a lot of guys. I still need to see a working thing, and then things can be built on top of that stack. So for India perspective, the India stack that we have right now, where you have Aadhaar, you have UPI, and then you have a couple of other things. If CBDC fits into that, it's fascinating for the financial inclusion part. But you can't say CBDC is good and cryptos are bad. That argument doesn't stand technically. No. So, but yeah.
You have a different fight to fight if that's the argument that gets introduced. And I quite wonder the kind of questions you're asking. I'm going to devote another session to just find out the kind of questions that you're putting out there, that you're often stumped.
I'll tell you the questions I was asked here in the Indian government, the question that I was asked back in Washington, the question that was asked back in certain quarters in the European Union. Hey, all this is good, but cryptos and stable coins, they might completely hamper the economy. I said, how? Like, let's have a discussion. A lot of things can hamper the economy. A lot of things can hamper your country. But how? Like, I really want to understand how. But yeah.
We'll save that for another discussion. Rene, coming back to you, you have 3 stable coins. We're talking about you have the US dollar, you have the Celo dollar, you have the Celo euro, and the Celo Brazilian real. Talk to us a little more about this. Why have stable coins become a big focus for Celo? And what makes your stable coins different from the rest?
Absolutely. And, I think just following right where we are in the discussion here, there are real benefits, right? So I think it was last year when a Grameen Foundation, who's a member of the Celo Alliance for Prosperity, ran a COVID relief program in the Philippines, and they were giving stablecoins directly to non-custodial wallets. People could then use Celo dollars in that case, because there's no Celo Filipino peso yet, but that will come at some point. But even with Celo dollars, they were able to use those at local stores, make purchases online, get deliveries. Like this is during the height of COVID. So it's really, obviously from a kind of contactless, no cash kind of payment perspective, it's great. It was amazing for this program from a tracking perspective. Much less fraud, much less kind of risk kind of involved, and then the user experience was amazing too, and the cost obviously were much lower, given that on-chain transfers are less than a cent. And so yeah, I think the case for digital assets for payments is, it's rock solid, right? I think where sometimes there's still a gap is when we then look at what are the on and off ramps, right? And so in this case, it's great because there were merchants and partners in the local markets and folks providing, easy on and off ramps to, for example, mobile money. And the question is always, it's not so much about the cost of like an on-chain kind of transfer, which for a lot of like modern chains is quite cheap. But what is the true cost of actually offboarding or onboarding? Because we're not yet living in a world where all my transactions can be in digital currency, right? Once that happens, we're good, we're golden, right? But until then, there's always the question, well, how much does it cost me, right, to actually go from my fiat currency to that digital asset? And if I lose 5%, 10%, well, then, that is suddenly I have to make this up, right? And whatever I'm getting, whatever benefit I'm getting has to be worth it. And so, yeah, to me, I think that's kind of one important point. The other one, you brought up 5G. We have been, and this is still shocking to me, but we're the only kind of community that's really focused on mobile, right? So from the beginning, even from a technical perspective, we've deeply invested in what's called in Celo the ultralight client, which is about 1 million times lighter than the Ethereum light client, which actually means if you are on a simple Android phone, you can sync with the chain, and that suddenly allows you to actually be a participant, right, in this crypto economy and in this new digital economy. And I think with all the talk about financial inclusion and giving people access, well, if you require people to actually have a powerful kind of desktop computer, right, to kind of be part of this world, then you're immediately kind of dramatically reducing the number of people that actually have access and can be part of this, right? So for us, from the very early days, building for mobile has been a key factor. And if you look at, for example, in sort of Celo DeFi and the Celo DeFi ecosystem, you look at Uniswap, which is a popular, decentralized exchange on Celo. I think it's over 80% of their traffic is on a mobile device, right? And if you were to compare that with, like, say, Uniswap or some other kind of DEX on, say, Ethereum, the numbers are like very different, right? Because obviously, for someone on a mobile device, just the pure transaction cost on Ethereum would maybe make that prohibitive in terms of the amounts you would kind of transact on mobile. So that's really, I think, a key part, I think, to unlocking mass adoption for digital assets is mobile, right? Is kind of the technology that, both from a kind of crypto Web3 perspective, but then also in terms of 5G, in terms of devices, in terms of like wallets and like the whole kind of infrastructure around it. And we've seen just massive advances on all these fronts in these last few years. And I think that's kind of another reason why I think at this point it's inevitable that this is where we're going. But even a few years ago, it wasn't even clear from a technical perspective whether this could work. So I think all of those things are, I think, personally for me, reasons that make me extremely bullish on, even there's going to be setbacks, right, in terms of like regulations and kind of like other, things along the way. But if you look at sort of the bigger trend, if you look sort of 5-10 years out, it's hard not to see a world where, so much more of our, day-to-day behavior can be accomplished with digital assets in a digital economy. And that's exciting.
Just something that came to my mind, you've got the dollar, you've got the real, and you've got the euro, and you said at some time you're going to have the Philippine peso as well. What are the significant challenges for you to be able to add more currencies into the Celo basket? What do you need to work through before you're able to get into a different geography?
It's a really good question. So the addition of new currencies is governed through the communities. So basically, if you have Celo tokens, you can put forward a proposal. You can say, hey, we should add this currency, and then the community votes on it. And usually what people want to see in the proposal as well, what is going to be the use case, right? What are people going to use this for? Is this actually going to be used, right? Or are we just adding another asset for fun, right? And so if you look at Brazil and the launch of the real there just earlier this year, there were tens of organizations right from the outset in Brazil that were like, yep, we're integrating this, we're supporting this. And so right at launch, you had like kind of critical mass in terms of this actually being useful in local context. And I think that's usually what we're looking for. And then, when this happens as a community, right, there's going to be a lot of buy-in for adding a certain currency. Now, I think historically, I think the dollar was kind of, maybe an obvious starting point. The euro was motivated by a bunch of partners in Europe that said, hey, we want a digital euro, right? And I think the more currencies are added, the more you'll see also network effects for example, remittances, right? And you'll have on-chain markets in these currencies that at some point will maybe make it, especially for a regular person, will be cheaper, for example, to change dollars to euros, right? Because the liquidity in that on-chain market is going to be high enough to give very low slippage compared to like your kind of local bank, your local broker. And that's really compelling. But I think also there's kind of an element of transparency, right? So if you're, take India, right? And you're cashing into, your exchange, right? You're going from your local currency, the rupee, to likely a dollar stablecoin, right? And that can be confusing. I mean, maybe people understand it, right? Because they're used to the dollar, but in many markets, that's just additional friction, right? Instead of just being able to cash into your local stablecoin, right? So I think the benefit there is it's just more transparency, right? And ultimately that also enables new use cases as these kind of on-chain currency markets become more liquid. But I will say with respect to Celo stablecoins, I think they're, you can think of them as kind of a protocol on the Celo layer 1 protocol. So there's also other stablecoins, so people can also hold UST or USDC on Celo. And so we're not like, think of it as a feature that the reason kind of Celo from the outset had a stablecoin protocol integrated is because we saw a big benefit in actually from a payments perspective, right? I think, and this is maybe like a little more technical, but if you're using an Ethereum wallet and you want to send someone a stablecoin, you still have to pay the transaction fees gas in ETH. And that can be quite difficult to understand, right? For regular, what am I, like, there's another token I need? Like, what are you, like, what are we talking about, right? And here we saw that, and we were doing some kind of pilots early on, and we're like, oh, wait a second, what if you could pay transaction fees in the stablecoin, right? And so if I want to send you $5, then I will literally send you $5, and then the less than a cent of fee comes out of that amount I'm transferring. And so we integrated a stability protocol to be able to whitelist these stablecoins as a way to pay for gas. So that was one innovation. The other one, which personally I'm almost more excited about, is the fact that unlike fiat-backed stablecoins, these Celo stablecoins are backed by a basket of crypto assets. And right now, these crypto assets are the usual suspects: Bitcoin, ETH. There's some stablecoins, other stablecoins in there. But also there are natural assets in there now, and for example, carbon offset tokens. And there's a proposal to, over the next 4 years, have up to 40% of those reserves, and the over-collateralizing all these stablecoins, to be in natural assets. And this may kind of get a little technical, but at a very high level, the idea is to say, if you can back currencies by natural assets, then you can basically tie the adoption of currencies to the preservation of our environment and have actually positive externalities for the environment. It's really cool. It's not our idea, I'll be honest, but
it's a cool idea.
There's a philosopher called Charles Eisenstein who wrote a book, Sacred Economics. This is before crypto, before blockchain. So he really was kind of a visionary on this. And he observed that whenever money was backed by things like gold, right? People would go and mine gold, right? And they were literally minting money. And so he observed that whenever money is backed by things, people will try to make more of these things. And so what if we can back money by things that we want to see more of in the world, right? Pristine forest, clean water. And so this is how this idea of natural asset-backed currencies was born. And we adopted this and said, hey, well, actually, you can tokenize these assets, bring them on chain, and have them actually be in a reserve for these new digital currencies. And that inspired Celo stablecoins. And so if you're using a Celo dollar to buy a coffee or pay back a friend, you're actually helping the environment, which is I think for many people that's increasingly an important consideration, right? So, and also tying back to CBDCs, having talked about this concept with some central bankers, they're very excited, especially in countries where you have like rich natural resources. And it could really be a way to preserve a lot of our most precious resources, and give sort of these resources kind of utility in this digital world.
Fascinating. Thanks for that, Rene. Much for me to think about. I'm definitely going to read up more about this thinking that is there when backing your stable coins. We've got a few more minutes before we wind up today, but I really want to have you both coming in on the current geopolitical situation that's happening out there, and how is it going to largely impact cryptocurrencies, not just stable currencies or CBDCs or altcoins, but cryptocurrencies as a whole. How do you see the current geopolitical situation affecting the outlook towards them? Is it a good thing? Is it something that's going to slow down people thinking a little more optimistically? Aritra, what are your thoughts right now?
I mean, well, at the onset, on the evening of a day which completely taxed the entire industry out, I would like to say this, that jokes apart, I think it's very interesting, the geopolitical situation, because it's a question not only coming from you, but it's a question that has come from a lot of bureaucrats and other governments as well in Asia. And it's a very interesting situation, partly because what has happened now. I find it fascinating. It's a very wrong word to say, because listen, there's a war going on. People are dying. The houses are getting bombed. So that's just the ugly, sad part of it. I hope we can do more to that. Having said that, I would say it's an inflection moment right now, because see what has happened with the entire Ukraine-Russia thing. Right now, Russia suddenly decides that Russia would want to now sell their resources, oil and all of that, in Bitcoin and in other crypto assets with other countries. So this does what? Like, for the longest time, the United States is at a position that it is, again, fantastic country, fantastic people who've run that country so far. The petrodollar economy was very powerful, right? It's the dollar backed by the petrol, right? Now, what this has done, and with the position that NATO has, and we've all known uh, uh, Russia's love for NATO over the years, right? And what it means for the larger European economy. Now, what this has also done is it opens up suddenly, hey, listen, I don't need to buy something from you in dollar between two countries, right? I don't need to do this with you in dollar. It has suddenly opened that up, and now it's a practical. It's like a beta test happening right now between countries, or between some countries, and then what they mean for Bitcoin. Right now, look at the other side, Ukraine. Unfortunately, what has happened, and I have friends over there, I have journalist friends over there, and it's harrowing. I don't want to get into those details, what's happened. But the Ukraine government today decides, the boss, I will take your help, monetary help in crypto, right? They sort of legalized crypto during the war thing, right? Now, that is one angle. It's good for the crypto narrative. Now, take it on the other side. As an individual country, whether it's the United States, whether it's India, whether it's any other country in the world, I think a lot of countries will now look at a financial order or financial technology from a very inclusive point of view. Ki boss, I'm a country. What do I need to do so that tomorrow, if there is a sanction on me, I will have an alternate infrastructure ready, right? Countries are thinking like that. I know some people that I've talked to, they are thinking like that. And it makes sense, right? Because put yourself in Russia's shoes for whatever matter. Put yourself in Ukraine's shoes for whatever matter. And how do you safeguard your country, right? If you do not have any natural resources and stuff like that, how do you safeguard your country? You build an army, right? Whatever, you build an economy. Look at what Israel has done. Look at, for that matter, what Japan has done, right? Now you build a country based, you scale the skill sets of your citizens, right? So that they're able to build and scale more in terms of companies, which employs more people. You're building technology and building companies that sell services to build locally across the globe. You're making some money as a country. Now, say a similar sanction environment happens in another country, right? That country, I think if they're smart, they have to think in terms of, what do I do if a large sanction like that happens against me? Boss, what do I have in my house? Inside my house, what resources do I have to safeguard my population and do things, right? Do I have an alternate financial payment ecosystem? Do I have something which is alternate to the SWIFT payment mechanism? Do I have something alternate to what is already considered a normal thing in global trade? So it completely, I think it's a very interesting moment in time, because I'm sure countries are thinking, if and people who take care of all these larger geopolitical decisions from individual countries, that, and I think this has also in a way pushed the entire narrative individually from a national security perspective. Web3, blockchain, crypto, what can these three things do for a country's national security perspective? Can it build an alternate infrastructure internally so that you're not dependent on the others, right? What do you have internally to safeguard your house? The same analogy appears. And although people are dying, it's a horrid moment in history. No war is good, man. No war is good. For whatever reasons, no war is good. People dying are horrific to it. That's just bad. That's just wrong on so many levels. But this is an inflection point where countries, specifically in Southeast Asia, again, I'm not a geopolitical person, please. We're all normal crypto people. This is the crypto little community. We're happy doing what we're doing. But if you're a country today and you don't have many resources, you will look at crypto and Web3 to build alternate infrastructure for you so that you safeguard yourself. So yeah.
Thanks for that, Aritra. Rene, is that how you're reading as well? Inflection point for the cryptocurrency community at this point?
Yeah, look, and it's really horrific what has been happening, and as someone who's grown up in East Germany, and yeah, it's crazy that this is actually happening. It's really crazy. Look, I think it's, yeah, maybe I'll take a slightly different perspective, which is sort of on some of the refugees that have been leaving Ukraine. And where we've been seeing a lot of actually kind of value in the use of crypto by being able to take funds right on that journey, and also for help to reach people much more quickly than through traditional means. And this is something we've seen in prior humanitarian crises, but here I think particularly I feel the technology again has come much further to not just from sort of a country kind of like reserve level, but even at the individual level have a direct impact for the first time, probably in a meaningful way in a situation that we haven't seen previously. And so I think this is going to be something where I think across the entire spectrum, we'll kind of look back and say, yeah, this was an inflection point for crypto. I think this is the first time crypto is it's very much part of the main discussion, right, on all angles, right? Whether it's from like donations to the Ukraine to like the Russia Bitcoin oil and gas purchases. So it's really that in itself, right? I mean, regardless of the underlying actions, right, is really a testament for how far this technology has come. I will say I've been encouraged by also how the crypto community has been supporting the Ukraine and people in the Ukraine and refugees. And I think, a lot of that is really been coming from the heart. And I think my hope is that kind of remains sort of the center of the action, and it's not like being spun in a story for like, oh, look at this great case study for crypto. I think we can, maybe that's like 20 years from now we can talk about it, but right now we have a real crisis at our hands, and so all help is, I think, needed. But yeah.
The community has been pulling together to help the refugees and to really give them the aid that they need at this point of time, to ensure that they have some semblance of being able to go through their daily lives as they move away from the areas that are struck in the war. Inflection point it is. Thank you so much, gentlemen. It's been a delight to talk to you, from starting to talk about stable coins and CBDCs, and to talk about what the geopolitical situation right now is really doing for the crypto community. And there is so much unfolding, and there is so much for us to take into, not to mention the regulatory landscape in India, which is also changing, giving us all so much to again sit back, take cognizance, recommend changes, and hopefully that will be something that will tend innovation as well in the years to come. Rene, Aritra, gentlemen, glad to have you join us here on Business Insider India. And we look forward to reconnecting with you very, very soon to learn more about what the Celo project is doing and what WazirX is innovating as well. So once again, thank you so much and have a great day.
Likewise. Thank you, guys.
Bye-bye.